Well, welcome back to Flexshopper's channel, a leading online lease-to-own retailer and payment solution provider for underserved customers. Joining to talk about the pivotal earnings as the company begins to build momentum here, we have John, the COO, joining as always. Welcome back, sir.
Hey, how are you? Good to see you.
Living the dream, and always a pleasure to get you back on. So I'm just going to dive right into this. I mean, a record total revenue of 38.6 million, while your earnings increased 2.05 cents per share, diluted share. But do you want to talk about the highlights? I mean, what stuck out to you? What should investors pay attention to on those earnings?
Yeah, no, we had a great Q3. I think the first big result is both a record quarterly revenue of almost $39 million. That's importantly a 23% year-over-year growth rate. And then also a record EBITDA of $12.2 million for Q3, which is 45% growth. And really what's driving that are, improvements in multiple fronts. So, we're originating more, we are approving more. So actually 111% increase in the approval amounts year over year, 33% gross profit increase, which is coming from a multi-year best bad debt and product lease costs, as well as a significant ramp up in the number of store locations that we have our product in. So in fact, our original goal for the end of the year was 5,000 locations with Flexshopper products available. And actually it blew past that and we're over 7,000 already, and we still have a couple months left. So really, really happy with the momentum that we're having. And I think the biggest thing that I'm really pleased with is, we've been working hard on getting that underlying asset quality in place, which we've done. And really that last bit was to start growing the number of customers with this favorable asset quality. And sequentially, we're increasing our year-over-year growth rate on revenue. It was single digits positive comp in Q1 of 24, and actually it's now 23%. So it's actually increasing. So really happy with the trend that we're seeing.
Yeah, definitely appreciate the insight there. And I wouldn't mind kind of just getting an idea moving forward. I mean, your balance sheet's still pretty strong here, 7.3 million in cash. I mean, what should investors focus on? What milestone expectations? I mean, I know we're finishing up the year here, but maybe give us some insight.
Yeah, sure. So we have a couple of important activities going on. So first of all, we entered into an agreement with the holder of most of our Series 2 preferred stock. So that was held in a fund that was winding down. So the holder was looking for a way to monetize that paper, and we were able to enter into a purchase option that would, in essence, give us a 50% discount on the liquidation preference of that paper. So, the net result of that is actually adding $1 of, common equity back to the shareholders. And it will actually save over $4 million annually of dividends that will, again, accrue to common shareholders. So, and as a part of that, we just launched a rights offering. We just put out an S1 for that. And what we're going to do with that is raise money to enact this purchase of the preferred shares, as well as retire some fairly high cost debt. So we have some sub debt that's over 20% coupon, and then our credit facility is mid-teens. So people will get worried that doing an equity raise like that is actually dilutive. But with the identified proceeds, use of proceeds, it actually will increase the EPS even with an increase in common share count, because the cost of equity is actually lower than our cost of debt, and especially with this significant discount that we're able to get with the purchase option of our preferred shares. So net result is some deleveraging, some simplification of our capital stack, with all of that money then accruing down to common and allowing us to reinvest into continuing the growth that we're seeing.
Yeah, definitely appreciate all the insight here. You guys are, on an incredible path. I think anybody that sees that within the earnings knows what we're talking about here as we pass it off to you, the viewer. We'd love to know what you think in that comment section and consider subscribing as news catalysts come down like this. Of course, we're going to bring it to you here. But on that note, as always, we look forward to catching you in the next one.